All right, what's going on, everybody? Welcome back to the vlog. We're posting this on the Millennial Trades channel. Guys, I just haven't been posting much because honestly, I'm just so down in the dumps. I was down about $12,000 on the year, but I'm still down like 9,000, and it just feels like I'll never crawl my way out of this, if that makes sense. So that's why I haven't been posting much. I mean, today, like yesterday I was up $250. Today I'm down $450. And it's like I make a little bit of progress and then one trade just kills half of my account or a quarter of my account or whatever. So, that's why I haven't been posting much, because it's just been a complete mind fuck. And it seems like every trade that I put on, the ones that I sell too soon or sell for a loss, I should have just held them. And the ones that I hold always go really, really, really bad. So, anyway, I wanted to talk a little bit about just some of my thoughts here. The NASDAQ is in a bull market, right? 20% from the lows. Have I made any money off of that? Absolutely not. But some people have. The tech rallies, Facebook, Apple, Tesla, Amazon, the fintechs. Just look at where they're all at from their lows 2 or 3 months ago. Some of them, like Facebook, Tesla, they're up, I don't know, damn near 100%, maybe more than that from the lows. So perhaps tech is being seen as some sort of safe haven asset where people can kind of park money because it's not banks and it's not, it's I guess, good in maybe an inflationary environment to have tech stocks, but they're not really growth stocks anymore because we're in a technical recession, and we have been for some time, I guess, depending on how you measure recessions. I don't know if I trust the tech rally completely. Buying shares up at the highs at this point seems like if Kramer is promoting it, there's something bad's about to happen. If Kramer is pumping and saying that tech stocks have plenty of cash and plenty of room to run, I don't know, that could be a trap, guys. That could be a trap. So cash tied up in insolvent, failing regional banks. That's the tech sector, right? They've got a lot of money in these regional banks that are either insolvent or about to go under. Now, maybe a lot of them have moved their money out, but, if they work in Silicon Valley, they're probably somewhat affected by the recent events. So, the mainstream media is telling us that the crisis is contained, but is that true or not? I'll leave that up to you guys. Do you think the crisis is contained, or do you think we're going to see more fallout as the weeks and months progress? Remember, going back to 2008, all those banks didn't fail on one day. Right? Like, before I read about the 2008 crash, like, I sort of just assumed, we just woke up one Monday morning and all these banks had failed. No, this took like weeks, months, almost a year to play out. And that's not even counting all of the warning signs going back to 2007, maybe even 2006 with the housing bubble. So, was this a traditional bank run? Not really. This was more about the, I don't know if you'd call them super net worth individuals or super high net worth individuals, but definitely more in like the hundreds of thousands of dollar range. Like, those individuals, they were the ones that pulled their money out of these regional banks and put them into some of the bigger names. Now, the bigger names basically took a lot of those deposits, put them right back into the regional banks to provide them with some liquidity, but that's the way it goes. Now, I want to talk a little bit about all the credit card debt, right? I don't have much. I keep a little bit of a balance. I'm always on time with my credit card. I only have one, but I hear you need to get multiple credit cards and, do well with them over multiple years to really get your credit score up. So that's what I personally am doing. But, talking about all this high credit card debt, there's a lot of bears out there not just the market bears, but the economy bears, saying that all this credit card debt is a bad thing. And the truth is that, all this talk about getting out of the system, getting out of, debt completely, all this kind of nonsense. It seems to me, if you look back 20 or 30 years ago, credit card debt, personal consumption debt, all kinds of debt actually was a lot lower than it is today. Fast forward 20, 30 years from now, things like credit card debt are going to be much higher than they are today. So I think that's just the nature of the beast. People are so excited to, predict this huge economic collapse right now. It seems unlikely. It seems like the dollar, the U.S. government, the military, I think it's got another couple decades in it. Are there some areas where it's in decline? Sure, I'll give you that. But the last time credit went down, or there was like a credit freeze, let's say, was like 2008. And we know how bad that was. We know how bad the economy was back then. So we could see credit and, just liquidity in general dry up, which would indicate or maybe even correlate with a recession, maybe financial hardship for millions and millions of Americans. So yeah, there's a lot of bears on the economy. They always point to this high credit thing, but the truth is that if we saw credit decline, that would indicate a very, very bad sign that we're going into some really hard times, and most of us are going to face hardships, especially if there's no credit. So usage and sort of the debt, as being bad, using debt or having debt. It's actually credit shrinking that would be one of the worst signs for our economy right now. So my plan is basically always the same. I'm working on my credit, obviously. I've got active income from several different sources. And I think for now that is important because I'm trying to build up capital. But as far as trading goes, I'm trading the market short term, and I'm trying to shoot for the smaller wins to build up capital. That hasn't really been working because all my losses have been bigger the past, 2 or 3 months now. So I'm sure the bigger trades will come. There have been a lot of missed opportunities. I'm not going to, vent about it here, but there's been a lot of missed opportunities on my part. And, I need to not be so discouraged because there's going to be opportunities tomorrow, obviously. So it's just kind of about keeping capital in my account between, delivering and catering and all my gig working and other opportunities that God has given me. I'm not gonna feel the pressure to use my trading account to make a living, right? That this year, that's just not feasible. Not even if you have $20,000 in the account, it's not feasible. The way I sort of view it from here, right, from the bottom, with a net worth of like a few $1,000s, is that if you had 50 grand in the account, then maybe you could think about starting to touch it. Pulling some of it out. But now, like, I'm just trading, and if I have to, I'm depositing, right? And I'm down. I was down more. I was down 12,000, but I'm down still like $9,000 on the year, and it does not feel good, guys. I'm telling you, it does not feel good. So there are some stocks that I feel that I'm interested in long term. Stocks that I've been watching and thinking about, buying a share every couple of days or whatever, because with my active income from the delivery apps, I can get the money basically that day, if I have to. So I've thought about purchasing things like Walgreens. What other stocks would I be interested in? Maybe some of like the tech, like if we could get PayPal and Amazon to really come down. I'm interested in oil. I think oil, if you can find those stocks at decent prices and, not only collect dividends, but get capital appreciation over the next 5 years or so, I think that would be awesome. I really like the fintech as well. You guys know I love SoFi. I've got my dad and my brother buying SoFi in their long-term accounts. So, yeah, guys, it's just been a difficult time. You know what I mean? I'm sure I'll be back to my usual self. I'll be back on top one of these days. But right now, it's just not in the stars. So, investing is a very hard discipline. You've got to be extremely disciplined to consistently put into the markets and accept the short-term losses and hold for the long-term gains and watch the capital appreciation, collect all the dividends, reinvest the dividends, right? That takes a lot of work and it takes a lot of discipline, okay? Trading is an even more difficult discipline. Now, it's not that I want to neglect one and only do the other, but there's something inside of me that wants to pick the path of most resistant. Maybe I shouldn't listen to that voice. But anyways, guys, I hope you enjoyed the vlog. Let me know your thoughts down in the comments section down below. Do you think this economy is headed for a major catastrophe? Do you think the contagion is going to spread? Or do you think we're going to get through this and we should all be investing long-term into the stock market? Let me know your thoughts down below. Follow me on Instagram @MillennialTrades. As always, until next time, I'll see you guys on the next video.